Good morning, everyone. Welcome to this webinar today, ESS Small Business COVID-19 Survival Panel. This is our 5th session of these presentations as part of helping you in your business. Today, we're going to be looking at how three-way forecasts can assist you in planning your business operations. And secondly, we're going to have a look at what are the key issues for you to consider to emerge in a sound position from the lockdown blues. And many of you are having those at present. The utilisation of three-way forecast case study to understand where you're headed is going to be presented to you today by Paul Barnaby, Chartered Accountant, who's a predictive accounting consultant. And Paul's also the Australasian representative of Plan Guru, an international company based in the USA that produces software for budgeting, cash flow forecasts, and predicted balance sheets. Good afternoon, Paul. How are you today?
Oh, hi, Peter. I'm good indeed. Thank you.
Okay, so we switched across to you now, so you can bring up your PowerPoint slides. Thank you.
Thank you very much for the introduction. Let's get going. Okay.
Yes, your slides are up. Okay.
Yep. Thank you very much, Peter. Okay. So, yeah, my topic today is the COVID-19 business downturn, or in some cases, there might be an upturn because there are some positives out there as well as the negatives. But in any event, there has never been a time more important for you as business owners to need to know where your business is heading, and in particular, that all important cash flow. And I'm here today to help show you how you can find out, and it's not a laborious exercise. Under 60 minutes, we can find out just exactly where your business is heading. Just a little bit about me. I'm a chartered accountant. I was for many years the managing partner of a second-tier firm, and during that time I developed an interest in, and which later became a passion in, what I call predictive accounting. And predictive accounting is nothing more or less than looking to the future and looking at that in terms of the traditional accounting statements that we've been used to getting off my old QuickBooks, Xero and the like. And so that includes a little bit more than that: financial analysis and strategic planning, and of course, budgeting and forecasting. I have my own consulting practice and I only work in this area. I don't do traditional accounting. And as Peter said, I'm also the regional integration consultant for the Asia Pacific region for Plan Guru, which is an American company which has a purpose-built tool which we're going to be looking at today in terms of the case study. So I've worked with many hundreds of accountants, obviously, but also people in business to help them as they prepare strategic plans and budgets. And again, in this strange period that we're in at the moment, there was never more of a need for plans and budgets. Because there's an old saying that goes, if you fail to plan, you plan to fail. And while that's pretty outdated these days, it's actually still very, very true. Because if you know the impact, and you probably already do, of the virus shutdown on your business, you can plan to avoid it or manage it, but certainly getting through the other side. And with the assistance packages that are around, you've probably already had to make some attempt to quantify that impact in order to make those applications. In particular, if you're looking to those government-supported loans where they guarantee 50% of them, you will need to supply a business plan, including budgets. And when I talk about budgets, just an estimate of revenue and cost just doesn't hack it. You've got to do those full predictive financial statements, including cash flow. So you need a budget. What do? Call your accountant. Well, maybe, but in all likelihood, they will be very, very preoccupied and busy, and they probably won't have time to help you. And Some of them are equipped to help you, some of them are not, but in most cases they just won't have the time. So what are you going to do? Reach for Excel, right? Wrong. Excel is a great tool, but it was never built for budgeting. It was built for engineers, it was built for builders, it was built for architects. Yes, it was built for accountants, but never ever was it purpose built just to do budgets. And if you're really interested, go and Google a guy called Ray Panko. He's a professor at the University of Hawaii, so not far from us, but he has researched all the published Excel files he could get his hands on, and he has found that 91% of them have got errors in them which the authors don't know about. I repeat, errors that the authors don't know about. And that's pretty scary stuff, because those errors can substantially affect the outcome of whatever report has been produced. And if that's not a bad enough stat to give you, Excel budgets are going to take you 10 times as long to prepare as it would if you use a purpose-built tool, such as Plan Guru, which I'm going to show you in a minute. So why would you bother? And on that topic, yes, I guess I'm a bit biased being the regional rep for Plan Guru. There are other tools out there. If any of you on the webinar today or watching later would like to ask me any questions about other tools that are there, I'm happy to comment. So what are we going to do? Well, firstly, let's look at what is contained in a successful budget. As I said before, they must be three-way. It must include profit and loss, balance sheet, and cash flow. And unless it's a startup that we're looking at, you've got to start from a known position. In other words, historic results that have come out of your accounting system, whatever that may be. And here's a biggie. They must be driver-based. When I first learned budgeting and forecasting, I was told, okay, take last year's numbers, add or subtract a bit for next year, and that's your budget. Well, no. A good guess might be better than that, because what you've got to look at is what actually drives the business. We're going to look at a restaurant today. Well, what drives that restaurant business is the number of meals they serve. But there's other drivers. It might be the transactions that you've got if you're a trading company. It might be the average price per transaction that you're getting. It might be your cost base. It might be the investment in research and development. It might be your wage and salaries base. Those are all drivers and must be taken into account pretty much on a line-by-line basis when you produce your budget. So if that sounds daunting, and yes, it can be, then obviously if you've got a purpose-built tool, it will be much, much easier, as you will see in a moment. When I talk about data, a budget is one form of data. The actual coming out of your accounting system is a second form of data, and the forecast is a third, although usually based on the original budget. So you've got to be able to look at all three forms of data as you're working through. Obviously, variance reporting is a must, and variance reporting is where we compare the actuals as after the period has ended with the budget that we prepared in the first place. Because people, the idea of preparing a budget, even if it's just for an application to the bank and then putting it away and never looking at it again, that is so wrong. It must be a living document. You must compare the actuals on a month, certainly on a month-to-month basis. Other reporting must do for you what you want it to do. So when you're looking at that, it's got to be flexible, and you've got to be able to get out of it what information that you want. Okay, I mentioned the case study, and this is a really interesting case study. It's based on a live example. It's here in my home state in Queensland, down in Brisbane, and we know their results up to the end of March. And we have their statistics on restaurant meals and takeaways. After the shutdown started, they obviously were only permitted to do takeaways, and they've done that, and that's kept them going. And we do have details of their food and labour costs. They do qualify for both JobKeeper and the cash flow assistance, and you'll see that in the numbers when I show you very, very shortly. A year ago, they were open 3 services a day, breakfast, lunch and dinner. For a number of reasons, about last June or July, they decided to close the evening session. And as a result, even prior to the shutdown, they were reasonably marginal and they'd run up a debt with the tax office. And they were wondering as to how they might manage that debt and obviously getting their cash flow back into the right side of the ledger because they had an existing bank overdraft. So let's go and have a look at some of the information, and I'll just open Planguru. And what I'm looking at here is the revenue statement for the actuals from July last up to the end of March. And if you just have a look up here, you can see their total revenues varying around the 40+ mark. It did drop in December as they were closed for part of the holidays in January, but averaging around 40 to 45,000 revenue per month. Gross profit of around 20 to 30,000 a month. The big one, of course, is wages, averaging around 15 to 16,000 a month. But as you'll see down the bottom here, they've only made $10,000 profit for that entire 9-month period. So reasonably marginal. If you have a look at the cash flow, and I won't explain this in detail, but just have a look down here at the net increase in cash per month, and you can see it's a bit all over the place, and their cash at the end of the period is negative. At the end of March it was -9, but it had been as high as 26 in January. And if we have a look at the balance sheet, you'll see that negative cash being represented at the top here, cash and cash equivalents. So negative nearly 10,000 at the end of March. And then if we come down further in the balance sheet, you can see here I've got this ATO liability, which is up around the $30,000 at the end of March. So they've got a heap of reasons, even with the COVID-19 crisis, they've got a heap of reasons to strategize and look to a budget to get themselves through this position. So I mentioned drivers. If you have a look over here, you can see I've started budgeting from April on. And what I've done some revenue calculations. And I've done that on just simple arithmetic, where average open days in the month is around 30. The takeaways that they've been getting is around 90 per day at an average of $10 per takeaway transaction. So the only revenue that they are currently experiencing is the takeaways of around 27,000 a month. They have thought outside the circle a bit. They're not far from the fruit and vegetable markets in Brisbane. And so with an arrangement with their suppliers, they've been selling fruit and vegetable boxes outside the restaurant, averaging 200 boxes in a month at an average commission of $8, so an extra $1,600 of revenue there. They then put off their casual staff and they went down to 4 full-time staff, 2 principals, a chef and a front of the house person. And they limited their wages to the $750 a week, the $1,500 a fortnight, or $13,000 a month. I'm also using this non-financial data page to do calculations on things like PAYG, but also importantly, I'm calculating their wage cost and looking at, when I go through, and I'll explain that a little bit further later, as to when they start trading up again, what's it going to look like. So if we go through now to the April, May and June budget, and I'll show that in a report which I've prepared, because I've shown that before and after assistance. So here we've got before assistance, there's that 27,000 of takeaways each month, 28,600 including the fruit and vegetable commissions. Down here in the wages, that was the position before they changed. So you can see they were losing around 5,000 a month. It rose to nearly 8,000 in the budget for June because we had accounting fees in June. I think we also had a power bill or something like that. Yes, there's a power bill in June as well. And over here, after assistance, so obviously the gross profit is all the same. The net profit has now changed because we've limited the wages to that 13,000. So you can see they're pretty much breaking even here, but with the assistance from the government. First of all, there's the 13,000 coming in from the JobKeeper. They also qualify for that PAYG at 7,284. So they have in fact made a profit May and June. April slight, but May and June. And again, if we have a look at the cash flow, the cash flow was still negative here before assistance. After assistance in April, it was still negative, but then we ran up to 30,000 positive in May and 46,000 in June. And the great thing with using a tool like PlanGuru is you can make changes to those drivers that I mentioned and showed you, and it'll immediately flow through, not only to PlanGuru itself, but in fact to this report. So, Peter, I'm happy to handle questions at any stage today. I'll just pause there very briefly, but I'll probably field questions at the end of my presentation, if that's okay. But if there are any questions now, happy to field them.
Yes, Paul, and if people could send them through, just type them in the chat, thanks, and then we'll discuss them shortly.
Great. Okay. So let's go back to PlanGuru and let's go back to the income statement, and let's just close up this financial year and let's have a look at next financial year. Okay, so what I've done for the next financial year, and I'm now budgeting to pull this business out of the crisis. And the way I've done that is this. I showed you these drivers before. So back in April, May and June, we had no restaurant transactions. I'm picking that by July, they will be ready to open. They may even be able to open sooner, but I've been a little bit conservative. So I've said that in July, they might get 30 transactions a day in the restaurant at an average of $16. They'll then drop the takeaways down from 90 a day to 70 a day, same at $10. But then you can see that the total revenue calculation for July is already up to 35. Then in August, I've taken the restaurant transactions up to 60, and then in September and from then on, I've taken it up to 80. Still doing takeaways in August, but down to 50, and then down to 30 in September and staying at that level. So from September on, you can see that the revenue is going to be 47,000. Still above where we were, averaging around 40,000 pre-crisis, but now looking at being more profitable. I mentioned that wage cost calculation. So at 35%, which is their historic wage cost, here in July, it's only going to be 12,390, and they're already covering that with the 4 full-time employees. In August, that 35% of 43,000 is going to come out at 15,000. So PlanGuru has automatically told me we will need to have 2,331 in casual wages. And that comes up to 3,500 in casual wages for a total of around 16,590. And then that 16,590 I've just carried on as a percentage of the wages through the rest of the year. So coming back to the income statement, let's see how that translates. So that translates in net profit terms, 17,000 July, 27,000 August, 19,000 September. It is a bit up and down, but nevertheless, we are still profitable, and we're looking at 136,000 for the year today. The real telling report, however, is the cash flow. And have a look here what happens in the new financial year. I am budgeting, that was the other thing to show you, I'm budgeting that we will reduce the ATO debt. So we've got payments of 20,000 in July, another 40,000 in August, and another 14,000 in September. So you can see here that the ending cash in July, 33,000, 29,000 in August, and we're positive all the way through. So what we've done is we've transformed what was a very marginal business even before the downturn. We've traded through the downturn with the support. I've shown the support, I think, as ending in, let's have a look. Yes, I've had it shown it ending in September. So from October on, they're trading on their own, not only profitable in terms of the net profit on trading, but cash flow sufficient to repay the ATO debt. If you have a look at the ATO debt that we looked at before, it's gone down to virtually nothing and then building up again from December onwards. So there we go, Peter. This has been a fascinating case study for me. I've been involved in this area of budgeting and forecasting for a good number of years now, and this has really been interesting for me personally. But to me, it typifies what somebody said to me the other day. If you plan and strategize to get through this crisis, you'll have an advantage over your competitors when it comes to the other side. So when restrictions are right off, those that are planning and knowing what they're doing with their forward numbers are going to have a big advantage over their competitors. So, Peter, I'll stop there. That's a bit of a snapshot of how you prepare a budget, but just to put it into the context of my slides, when I put this together, it took just a little bit less than an hour. And so I commend the concept of three-way budgets to all of the people that have logged in today. And if there's any questions, happy to field them now.
Thanks very much, Paul. Yes, it is a great tool to demonstrate what is happening within a business and what might be able to happen. And that's the whole benefit of budgets and cash flows, to put on a piece of paper what you've visualized, to see how it's going to work out, to see whether there's any big surprises or traps in the overall exercise. And basically, Paul, you'd agree, I'm sure, that every business should be utilizing some form of budgeting and cash flow forecasting process, shouldn't they?
Oh, absolutely. You just cannot do without it.
There's going to be a lot of challenges even between now and the end of September, and we're going to talk about some of those shortly, but most definitely challenges post the end of September when JobKeeper support has concluded, and businesses need to get ready now. Talk to your accountants, get these calculations done. Paul, who's the subscribers to products like Plan Guru? Is it businesses themselves? This is primarily an SME audience that we're talking to. So should they be subscribing to products like Plan Guru themselves?
Yeah, good question, Peter. Yes, of course they should. Primarily, it is a tool that would be in CFOs or accounting advisors' hands. But Plan Guru has many small businesses that use it directly themselves. Often because, as I said in my slides, their external accountant is too busy or maybe just isn't equipped. But I would say of the user base in Australia and New Zealand, other than accountants, probably 70% are what I would call SMEs. We've got a number of larger users. For example, one of the biggest universities in Sydney uses Plan Guru. One of the biggest suppliers to the mining industry for vehicles and trucks and what have you in Western Australia uses Plan Guru. But so does a small honey manufacturer in New Zealand. So it's, and if any of what the viewers today would like to contact me separately, I'll just grab my slides in a second. And I'd be happy to talk to you about it separately, no cost or obligation, obviously. I can either point you to an advisor who'd be able to help you if yours can't, or I will be able to help you direct. let's just grab my slides. Here we go, front cover slide. Oh yes, just going through what we did in the restaurant just before I finish off. They released the casual staff, they got the government assistance, they planned to restore profitability in the cash surplus. But yeah, if you'd like to email me, there's my email address, paul@beyondaccountingtechnologies.com. There's my landline number, 07 3102 1330, or you can get me on the mobile, 0411 214471.
Paul, I think a lot of people could use this for preparing what I like to call their what-if type calculations. They want to do some planning. Now, I know that comes under, as far as I know anyhow, how Plan Guru is organised. It's part of the forecasting package. You just want to comment on that?
Certainly. One of the things with Plan Guru is that it is what you want it to be. If you want to use it as a what-if or scenario testing tool, you can do that. It can, and that can sit alongside the formal budgeting and reporting process. So frequently users will look at a scenario, they'll look at what they think is the most real, and then they'll start looking at some what ifs. What if we did better than we thought? What would be the outcome on profit and loss, balance sheet and cash flow? That's fine, let's save that and have a look at it later. But what about if we did worse than we think? If we went down 25% on our, what will be the result of that? And in a few minutes, you'll be able to show the results of that as well. So absolutely, it's like I often say, Plan Guru is, if you want to keep it simple, it is simple. If you want to make it complicated, it can be complicated. Most certainly, what I like about Plan Guru is that it is controllable and configurable for just about every environment. Doesn't matter whether you're selling cattle or peanuts or restaurant meals. Plan Guru will help you.
Yeah, it's a very adaptable program. And so those of you who obviously are watching this who are running businesses, small and medium sized, there's no reason why you cannot be undertaking these calculations, or your internal office staff people could be doing this, or alternatively your accountant could be doing this for you and feeding it through to you. But I think it's always interesting if the owner operator of the business understands how these calculations are put together, because you as the business operator have got to have faith in what's been forwarded to you is accurate and able to be utilized in your business. And you can also get a budget variance report also, Paul, can't you?
Indeed you can, yes. Yep.
Okay, so we don't seem to have any questions at this stage. If you think of questions later on, I'll be giving you an email address. You can either send it to Paul or you can send it through to me and I'll send them on to Paul. Paul has another engagement, so thank you very much for your time today, Paul.
No problem.
We'll be talking to you later on.
Thanks. And yes, if there's any questions, just shoot them through to me. I'd be happy to answer them directly.
Okay, thank you very much.
Okay.
Do you just want to, yeah, we've done that. And I'll just share this screen again and you have a good day, Paul. So if you've got any questions for Paul, can you send them through to me, peter@essbiztools.com.au. And those of you who are watching this webinar later on in your own time, someone told me recently 3 a.m. Well, if that's your preferred time, that's fine. I'd prefer that you didn't ring me then with any questions, but you can send emails at that time if you wish. peter@essbiztools.com.au, and I will pass them on to Paul and we will then send you back the answer. And so that everyone else has got an idea, unless you mark the question confidential, we will place the question onto the ESS Small Business website together with Paul's reply. So that keeps everyone informed of the ongoing utilisation of this product. I'm now going to give you an SME news update. We've been doing this every week for the last 5 weeks, and the quantum of news stories or tax office announcements or whatever has varied, and we have talked about these in the week by week, so we're not going back over items that were announced more than a week ago. You can view our previous webinar recordings that are on the ESS Small Business website, www.ess-smallbusiness survival in difficult times. And there are the 5 webinars with a short profile on the key presenters. Today, I want to talk about recent comments. And most of these are from the media. Fewer shops as retail reinvents itself was an article in the Financial Review on the 15th of May. So for those of you who are operating retail, it's interesting to keep abreast of what's happening. Retailers across Australia are increasingly planning to cut the number of bricks and mortar stores as they prepare for the post-COVID-19 landscape, with grooming products company Shaver Shop the latest to question the size of its physical shop footprint. It's not practical for a lot of you who have just got one business premise, but for those of you who have a number of business premises, perhaps you can start thinking about whether you need all them. That's obviously what big players are doing. The obvious replacement is to be selling via the internet, and internet sales have increased dramatically. I noticed Myers had major promotions on internet sales last week. So that is likely to continue. We're going to see a whole new industry, I think. JobKeeper in jeopardy. That was a story in the News Limited media on May the 18th. And this is because there's been some ongoing speculation in the media that the government is going to make significant changes to JobKeeper. The Treasurer has announced that there is to be a review of JobKeeper in June to see how it's going. One of the interesting situations is that basically the $130 billion that was allocated in the temporary budget that the government introduced for COVID-19 has been allocated. So there's been enough applications come in for the JobKeeper funding of $130 billion to be allocated. And the government still has the JobKeeper registration process open. It is open until the 31st of May for businesses to obtain JobKeeper reimbursement for payments in the month of April. So that's the 2 fortnightly sections in the month of April, as long as those payments were actually made to the employees by the 8th of May. You have until the 31st of May to register. But the government has also announced that if you have found that you are not eligible as a business for JobKeeper in either March or April, you can still test yourself in subsequent months, May, June, July, August. And if you find that your turnover has dropped by 30% in one of those months, you can then register for JobKeeper. Obviously, you will only receive the JobKeeper $1,500 per fortnight from the date that you have identified to the tax office that your turnover has reduced by 30%, and that has to be for a full month. So I can't really give you a firm answer, of course, because I don't think anyone can. The government is reviewing JobKeeper. At this stage, though, the Prime Minister has been fairly adamant that JobKeeper is continuing to 30 September, because there are a lot of businesses that are really relying on this at present. Unfortunately, there's been accusations that there are some people making claims that are not fully entitled to them, or they're gaming the system, was one headline. That could place in jeopardy the scheme for a whole lot of businesses. However, I wouldn't be placing any reliance in any thoughts that JobKeeper would continue beyond 30th September, unless you happen to be in an industry that the government is accepting is at high risk because of COVID-19 coronavirus. And at this stage, that would be the tourist industry that's been affected by international tourists, because we're probably not going to see too many international tourists in Australia for many months at this stage. I hope that helps you in your thinking about what's going to happen. The next one I want to refer to is the just had a problem with my mouse wanting to work then. It wanted to have a bit of overtime, I think, and have a sleep. Government to resist overhaul of JobKeeper was also an announcement. So there's various media commentary. I always get a little bit nervous when we got media commentary. Some people are arguing that JobKeeper is in jeopardy. Another article was saying that the government resisting calls to overhaul JobKeeper. Interestingly, the government's saying that the changes that certain people are suggesting, by the time they would be implemented, it would be the 30th of September in any case. So the government's not rejecting the concept that some changes were needed. And after all, this whole program was put together very quickly, and there had to be some flaws in it. Normally, governments plan for months major changes to the taxation system or to the business financing system, and this has been the biggest one ever. So you would expect there to be some areas. But the last one that I want to refer to is the one that I'm going to lead from in our next segment of this commentary for you today. And that is, banks warned, don't pull the plug too early. This was a commentary in the Financial Review this week on Monday the 18th, when the Small Business Ombudsman, Kate Carnell, made some comments directed at the banks. And basically she was saying to the banks that you need to continue to support small businesses. But this is a real warning signal for those of you in business that if you're looking to get support from your bank, my suggestion is you apply as soon as possible. At present, the federal government and the Reserve Bank have made available a special funding stream to the banks totaling $105 billion, which the Reserve Bank has lent at an interest rate of 0.25% to the banks, for the banks to then lend that money to small, medium enterprises, turnovers under $50 million per annum, in components or tranches of up to $250,000 for a 3-year period at a low interest rate, that the government, federal government, is guaranteeing 50% of the debt, but the banks were not to impose any additional security. And the other part of the rules was that the Reserve Bank was saying the banks had to utilize or implement their normal lending criteria. So the upshot of that has been the loans have been packaged and the Reserve Bank said they could only run for 3 years. I understand most banks are lending at about 4.5%. And I also understand that most banks are imposing a personal guarantee as a security. But there's no additional security, no charges over any assets under those loans. About 2 weeks ago, the Prime Minister gave a probably more than gentle nudge to the banks that he expected them to be processing those loan applications faster. And the numbers seem to have picked up. But what I can ascertain, nowhere near $105 billion has been lent to businesses. The reason for going through that is to say to you, if you believe that you may be looking for some funding support, even post 30 September, I think you should be looking to apply for it now, because the coronavirus SME guarantee loans are only available until the 30th of September. The Reserve Bank condition is that any unutilised funding out of the $105 billion by the 30th of September is to be returned to the Reserve Bank. So this is money that the government and the Reserve Bank wants put into the system promptly so that it can be used to keep people employed and to keep businesses operating. And it's for working capital purposes. Ms. Carnell said that banks have been clear that borrowers who have reached their borrowing limit should not be extended more credit. While the Commonwealth Bank said last week it wanted customers to cut holidays short where possible. So the Commonwealth Bank was saying they wanted people working. Carnell said it's important for banks not to jump the gun or reduce or lending conditions, on relaxed lending conditions, because many businesses might not fully recover from the crisis until late 2021. So Kate Carnell is looking at her projections and saying that many of you in small business could be hurting well into 2021. And I'm going to talk more about that particular issue shortly. Just remember, if you have any questions on any item to do with COVID-19 coronavirus and how we might be able to help you introduce better processes for your business, please contact us by sending or updating a question into chat. What I want to now talk to you about is the key issues for your business so that you will emerge in a sound position from the lockdown blues. And I know many of you do have the lockdown blues. You are working under very difficult circumstances. I think first and foremost, you all need an accountant who is doing more for you than preparing income tax returns. And if anything has come out of this crisis, it has been that a significant number of businesses, probably well over 85%, have been turning to their accountants to get the various forms completed, to do the calculations, to give you the assurance that you might qualify for JobKeeper. But there's plenty of other things as well, to register for the apprentice subsidy, to work through whether you can utilise the commercial rent reduction availability that is, but you must qualify for JobKeeper to be able to utilise those amendments to the legislation. I think you should be engaging your accountant as your chief financial officer and telling your accountant that, because you really do need them to be doing more work than just taxation. You also need your leadership team to be clearly identified and then to determine strategies for the balance of this year and then into 2021, bearing in mind Kate Carnell's forecast as the Ombudsman for small business, that many small businesses are going to continue to have difficulties into 2021. My strong recommendation is each of these items that I'm referring to starts today, not at the end of September. In some respects, that's going to be too late. You need to prepare the three-way financial forecasts to reflect your strategies that Paul just went through with you. And you can do various scenarios to see what the outcomes will be. and what effect it's going to have on your financial position in the overall scheme of things. And the big question I think you need to be asking yourself, is your business going to need some sort of extra finance contributed to it between now and at least the end of December 2021? What do you need? Now, you might be planning to launch a new product. You might be wanting to expand. You might be wanting to take advantage to perhaps buy another business. And if you want to do that, where are you going to get the money from? Have you got the cash reserves in your own organization? That's great. But if you haven't, I'd be issuing a word of warning to you about relying on banks to be able to produce funding for small and medium-sized enterprises after the 30th of September this year. So I think you need to be considering the preparation of a loan application now to take advantage of the Reserve Bank and Australian government funds that have been made available to banks to lend, the $105 billion that can be put into tranches of 3-year loans, $250,000. To do that, you're going to need a business plan or a dot-point business plan that analyzes what's going to happen in your business for the next 3 years. And you're going to need a budget and cash flow forecast, the 3-way forecast that Paul talked about before, because the Reserve Bank has specified that the loan applications for these Commonwealth Government 50% guaranteed loans must be made under proper banking conditions. And banks want business plans, budgets, and cash flow forecasts. The other big problem I think we're going to see emerging in Australia is a significant drop-off on the amount of money available from government grants after 30th of September. I think the governments, the states and the territories and the Commonwealth have done a fantastic job in supplying money to help businesses. Many of those support programs have been drafted at the small business and medium-sized enterprises, businesses with turnovers under $50 million per annum. In fact, I think the state and territory governments have probably handled far more money than what they normally do in grants, probably equivalent to 3 to 4 years of a normal grant funding. I don't think we're going to see anywhere near the amount of money allocated to grants over the next period after the 30th of September. I think it's going to dry up. So banks are going to be difficult to deal with, and so as grants are going to be difficult to deal with. And the other big issue when you consider banks is banks are already making provisions for increased doubtful debts. They've been announcing that in their interim financial results. So banks, I think, are going to be very wary of doing or of getting more exposure within the small business, medium-sized enterprise borrowers. So your business needs your leadership team developed and active. You might need to think about getting ready to try to raise some additional capital for your business. You have to be a company, but if you're a sole trader or a partnership or a trust, you can convert to a company fairly quickly. Just talk to your accountant. And there's 2 main opportunities that are available. The first is called Section 708 of the Corporations Act. If you haven't heard about it, it's been there a while now, 35 years. And crowdsourced funding equity raising, which started in Australia about 18 months ago. They are both avenues of being able to raise capital for your business. There are processes that you have to work through. Please talk to your accountant about them. Or if your accountant's too busy and is not interested in those things, please send me an email and I will refer you to people who are our subscribers, accounting firms all over Australia could assist you if you wish, because that might be the only way you're going to get funding for a further project, unless you set up that borrowing from a bank prior to the end of September this year. It's that urgent. And for this reason, you need to be talking to your accountants and asking your accountant to wear a chief financial officer hat. And if they don't want to do that, you might just leave that current accountant with your taxation work, and we can assist you to find other people who will just offer a chief financial officer service for you. And then you need to implement the strategies, your leadership team, but you need regular business review meetings. My preference is monthly. Many of you will elect to undertake this 3 monthly, but please do it. It is the think tank of your business. But I also believe that your accountant, acting as your chief financial officer, should be present. In fact, many businesses have made the accountant, chief financial officer, the project manager of that process. So that the leadership team comes together, there is a financial analysis to every segment of the business. It's not there to discuss taxation. Taxation doesn't add value to your business. These meetings will, whereby your team is there, the production, sales, marketing, finance in the chief financial officer, customers analysis, all the people, and it might only be 2 or 3 in some of your businesses, others it might be 6 or 7 people. But set up a regular meeting, have minutes prepared, action plans. Your accountant should be able to do all that for you as the project manager. And then follow up. People who are asked to report should report back before the next meeting. So they're the strategies that I'm suggesting to you today to try to overcome the lockdown blues. Everyone needs to be getting back into work, but there is a unlikely situation that's out there at present. No bank or lender can take action against any small business at present. The government's put an embargo on all that to the end of September. So it's creating a bit of a false situation where businesses think that no one can take action against them. There's no penalties. Well, there will be soon, end of September. The best plan now is to make sure you're going to be able to navigate through the 30th of September into a prosperous post period after the end of September. But unfortunately for many of you, unless this is planned and then properly implemented, with your accountant being a key person in that strategy, I am worried that for some of you, this won't work. The Small Business Association CEO, Peter Strong, has forecast that over 200,000 businesses will fail. And a lot of this failure is going to occur post 30 September. Of course, the funding support from the government at present with JobKeeper is keeping the system going. And that's not always going to be there. So ESS Small Business can assist you. We have a COVID-19 survival plan that's available, and you can have a preview of it by going to our website, www.esssmallbusiness.com.au, and that will help you through this process. And we have products which will assist you to gear up on what I've just been talking about, working through to the monthly business review meeting concept. Our next webinar is on Wednesday, the 27th of May at 12 noon AEST. And our presenters then are going to be Amanda Gascoigne, who's an accountant, and on how to enhance and strengthen your relationship with your accountant. Amanda is based in the Hunter Valley and works with accountants on improving their services to businesses. And I think you'll be interested to hear from her on the relationship and the approach that she's encouraging accountants to utilize in dealing with you, SMEs. And we also have Matthew Karakalakis, who's a partner in AMK Law, who are located in Adelaide and Melbourne. And Matthew's going to talk about the legal issues relating to COVID-19. And this is a very important issue for many business people. So I would commend this particular webinar to you as being very important. If you want to view any of our past webinars, please go to our website, www.esssmallbusiness.com.au, and they're all there. If you wish to register for next week's webinar, please go to www.esssmallbusiness.com.au/webinars, and we will be most happy to see you present at our free webinars. If you need more information, please visit esssmallbusiness.com.au. Survival in difficult times, learn more, because that's where the COVID-19 coronavirus support package is. Or contact us, Peter at essbiztools.com.au, and that's where you would send any questions you have for Paul Barnaby on his conversation on three-way forecasts, or for me on the suggestions that I'm making on making sure your business is going to survive the balance of the period up to 30th of September, but very importantly, that you have geared up to be able to navigate the situation post 30th of September, where there will be no more government support, no more JobKeeper payments, and the Corporations Act will be back to what it normally has been, that banks and other lenders can take action to recover money. So finally, stay safe. Thank you for participating in this webinar, or for watching it at whatever time you found suitable to watch it. If you enjoy it, why not send a link to your friends and colleagues, or invite them to go onto our website, or invite them to contact us, and we will make sure that they are on the mailing list for accessing these webinars in the future. We are committed with our affiliates to continue to produce these webinars to communicate with the small business and medium-sized enterprise community until the end of September. Have a great day. Thank you for being with us whenever you have watched this video. Thank you.